Now, Gopal Srinivasan, Chairman and Managing Director, TVS Capital Funds Limited and Vice Chairman of the Indian Private Equity and Venture Capital Association. Appreciate you joining us in our studio today. Thank you very much for that.
Thanks for having me.
Let's get right to it. Budget delivery, promises, hopes, expectations. Has it all come through, materialized?
You know, when Prime Minister Modi said that he was facing an exam on Sunday, we felt the same way. And I guess this time we feel distinction. We've really got everything that the industry needed from a government perspective as far as the AIF or the Alternate Investment Fund rules are concerned. So really it's now up to us to take advantage of the opportunity and I think not focus on regulation.
Okay, so you've had a chance to talk, within the association, members, assess together in a sense. Net, very specifically, what is everyone pleased about?
We asked for four things. Firstly, we said reduce the holding period for unlisted equities to the same as listed. So they made it from 3 to 2, halfway mark, good enough for private equity. Second thing we said basically is that when foreign investors invest in alternate investment fund, they should get beneficial rates in force. What that means is if they're based in Mauritius or Singapore, they should not have to pay a withholding tax. That came through. Thirdly, we basically said that when we sell an asset, sell an investment, let's say a share in an unlisted company, it should not be treated as business income. There should not even be an iota of doubt. There should be certainty. That has come through. A notification is due shortly. And lastly, and most importantly, 85% of the 20 billion in private equity last year came from vehicles based in Singapore and Mauritius. These vehicles ask for something called safe harbor. That means when they sell an asset in India, security, and make profit, it should not be seen as local profit, but profit made from the domicile they came from, Singapore, Mauritius. That has been significantly given, significantly.
I was going to say significantly, not completely.
Well, the point is, it's very much like basically liberalization of India. 91 was a dramatic change. A lot of changes happened later. But the principle that somebody with 26% ownership in an Indian company can have safe harbor would probably cover of that 85%, maybe more than half.
Okay. So, that's reassuring. Also, just the quality of engagement that happened pre the budget. Offline, you were talking about how the approach has been very different. Is this a natural extension of the government's focus on startups and therefore you have to nurture the investors?
I think it started with the quality of basically the bureaucrats whom we've been engaging with, whether it's Shaktikanta Das or now Dr. Hasmukh Madia, a Minister of State of Finance who's extremely knowledgeable about this whole investing and the monetary policy as an asset class. The tax department that showed very, very high level of openness to listen to us and of course make their own independent decisions. All wrapped together in a folder called IPAC, the Alternate Investment Policy Advisory Committee, a committee set up by Mr. UK Sinha, the chairman of SEBI, and chaired by Mr. Narayan Murthy, which came out with a very comprehensive 160-page report. And we've been discussing these very same issues now for 2 years. And the dialogues have become deeper, richer. Clearly, everybody has to look after their stakeholder interest. And the government did their job. But what they have delivered now, which is essentially remove obstacles, no concessions, in a tax-neutral way, I think we couldn't expect more. Today, when the Revenue Secretary came yesterday morning, he opened his page and he was speaking clause by clause, item by item. And the nuance of saying, I'm giving 26, I can't give you 51 this year. I know you'll come back. I think it made us happy. So we told him, you talked about consistency, clarity in tax policy. You added to a D and a C, detail and confidence. You left us with confidence.
Okay, that's good to know. It's always, when we say, okay, so you're happy, so what does this really mean? I mean, is there going to be a quantum jump in the volume and size of investments? Look a couple of months down the road, how do you see the impact of these proposals playing out?
Let me look a couple of years, because we're a slow asset class. We take 5 years to move. I think you'll see a lot more domestic funds, domestic fund managers. You will see global funds like Carlyle and KKR do more and more domestic fundraising, commingled with foreign money. You will see, this morning I was with the chairman of the PFRDA, Mr. Hemant Contractor. They've announced 2% of private portfolio, private pension can be invested VCP. You'll see more and more institutions coming up. I think what it means in terms of good news is a lot more funds for entrepreneurs from managers who understand the local detail very well. What it means for fund managers is better get your act together, better be really well managed, because only 30-40% of the fund managers who are seen as good will get funds. Previously, you might have known somebody or people were enamored with an asset class and gave you money. I think that is going to much more a systematic meritocratic process. So I think the news of fund managers is we better get our acts together and only the meritocratic will win.
Well, I'm going to come back to, the opportunities for fund managers in India right now. But I want to stick with the budget and look at it from the other side, which is if you put the startup lens on and say, what is this budget delivered for the startups, starting with the tax holiday, is it material or not?
I'm going to speak with my personal opinion. I basically believe SOPs create SAPs. I think what we need in an area like startups, which is all about cutthroat competition and cutting edge innovation, incredible energy, is opportunity and removing obstacles. So the government policy has done fantastic things in terms of removing obstacles. Yesterday night, Dr. Amitabh Kant spoke to us about one-day registration for a startup.
Got to see it to believe it, though.
March 1st is what he said. So I'll take it as done.
Face value.
But I haven't downloaded the app. He said, please download the app, all of you in the room. So I'm taking it at face value. Second thing they've done is basically in terms of essentially making sure that when people invest in a government fund of fund, its capital gains exempt up to 50 lakhs. Third thing they've done is for the, as I wrote in my article, for the children of the Indian SME businessman, if the asset is sold like a family house and that capital gains is invested in a startup, then that becomes capital gains tax free. So given a lot of incentives to invest, to create private capital expenditure. I think those are material. 3 out of 5 years tax waiver, I mean, I think it's...
That is,
it looks good.
It just looks good. It sounds good. I was talking about, yes, you referred to an article you wrote where you said not a lot of SOPs, and you've explained why you're not a big fan of SOPs, but you've alluded to a vast playing field of opportunities. And, you're looking at it from a much wider lens than most in the private equity venture capital space approach it. I wanted to understand what is that large opportunity that you're seeing out there?
I think a venture fund exists for entrepreneurs and entrepreneurs exist for opportunities. So in some sense, it's opportunity that matters most to make economic gain. With this kind of, take a simple reform, bus passenger transport. 60% of Indians every day travel in a bus. Every state for varying levels controls it. Most states, the powerful states, it's only 20% private. By changing Motor Vehicles Act and making it easy, and I do not know the details, let's assume that what is said is what
it did sound very compelling.
Right. I think those kind of, whether it's ticket booking, driver training, running the buses, repairing the buses, aggregation in a marketplace, and look at the scale of that opportunity. Or for example, the e-marketplace for agricultural commodities. 12 states have, I understand, dismantled the APMC Act. If most states dismantle APMC and farmers can transact directly, we're really creating democratized commerce for the bottom of the pyramid, as C.K. Prahalad would have said. So I think that kind of opportunities, it creates innumerable opportunity. We cannot even quantify them. The entrepreneurs will discover them.
How much have you seen of, the e-piece in traditional Indian agriculture? You go through, I'm sure, lots of profiles of startups that are operating in all sorts of different sectors. The E in agriculture, is it beginning to take hold?
It has. It has taken place in certain sectors. For example, I know one sector I can speak of is dairy, where, for example, the farmers who are supplying milk every day are now getting their accounts on apps. One of the companies we've invested in has actually taken the initiative. The initiative came from the company, but now the farmers are insisting to other dairy companies that they want a similar system which gives the hisab every day, how much milk was supplied, how much payment was made, what was the fat content. So I think where you see value, people accept it. Where it's E for the sake of E, I think it just remains out of the picture. So
would it be fair to say that a lot of, these, you use a term like, say, tech startups that are reaching out to communities like farmers or, dairy farmers, they're the ones who are also bridging the knowledge gap or the fear gap for the end community like the farmers? I think so. I think it's going to be entrepreneurs from those areas more so. In such a short span, the number of startups, maximum number of startups is moved from Bangalore to Delhi. I think it'll slowly move from Delhi to Hisar and Karnal and wherever else, Tanjore or whatever the right names are in the industry. I think you'll see a wave of entrepreneurship there. When Modi stood up and gave that speech, I think he inspired a lot of people on television to encourage their children to experience entrepreneurship and become less
ashamed of failure.
Okay, with your permission, I'm going to change gears a little bit and just understand at TVS Capital Fund, I mean, you know, what are the areas that are looking promising to you? You know, there's already some talk beginning about valuations in many e-commerce startups ballooning, perhaps beyond reason. What's the lay of the land in terms of opportunities, valuations, as you see it?
You know, we basically invest only in three simple themes. One is the masses of India consuming more, which means we invest in mid-market banks. We've invested in a dairy company, which is directly linked to mass consumption. This budget does a lot for that kind of area. The second thing we've linked to is basically where we believe reforms can increase the value of a company. National Stock Exchange, India Energy Exchange are classic examples. And a little bit we've invested in retail this time. We've actually invested in an e-commerce company. And there, for example, our thesis is largely that online is actually the best way to accelerate offline and not a replacement for offline. So I think we bring that kind of thesis. Valuation on startups, obviously, you know, if you're sitting at the edge of an ocean, there are going to be waves. That's the nature of the ocean. So it's the nature of startup investing. But see it in a 7-8 year cycle. And remember, all the money that has come to India to boost all these startups has come from foreign money. So we should be happy.
Well, you know, I wanted to, since you veered me towards exchanges, and this budget again has allowed foreign stock exchanges to increase their shareholding in Indian exchanges, I think that in itself is, and then there's this whole thing about, you know, self-listing. There are a whole bunch of sort of relatively unknown, undiscussed aspects of exchanges. Flesh out the argument behind your investments. Well, just the rationale.
Sure. Actually, ours is a fairly simple idea, that nearly 50% of the National Stock Exchange is owned by government or quasi-government entities. Banks are under stress. They would need liquidity for those entities. And the only real price discovery mechanism would be a listing and not a bilateral trade. So that was really our thesis. NSE is the dominant exchange, extremely well managed. So that's why we went into that particular sector. So we think that will play out now. In fact, if anything, the bank stress and the need for recapitalization, and critically the government's innovative way of finding money for recapitalization. You saw day before yesterday's announcement about real estate on bank books. I think a 40 or 50% can now be used for revaluation reserve. You talked about coming less than 50%, combining banks. So we think NSE therefore getting listed is a real possibility. Yes, there are a lot of issues like self-listing, but do you know that 18 out of 20 exchanges in the world are self-listed?
But the mindset for self-listing hasn't sort of taken root and shape firmly here.
It hasn't, but hopefully with this government willing to take more and more modernization steps, hopefully they will create an independent regulating mechanism which will be the regulator within SEBI for both BSE and NSE, so that the exchanges don't have that self-regulation function which is today embedded. That's the core of the argument. The core of the argument is that's why others in other countries it's possible. The counter argument to that is in those countries there's only one exchange, so there is no choice. So maybe both are true.
Okay. Well, Gopal Srinivasan, I'm going to leave it at that. Really appreciate you joining us today on Power Lunch. Great to have your insights on the channel.
My pleasure. Thank you.